Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome back to the Aviation Insurance Podcast, and we've been on this journey of learning about various aviation insurance policies. First, we walked through an aircraft insurance policy. Now we've been walking through the aviation commercial general liability policy. We've talked that the major structures of really any insurance policy are the DICE, the declaration section, insuring agreements, conditions, and exclusions. And we just spent the last several episodes going through coverages A through D in the insuring agreements of the aviation commercial general liability or CGL policy. And so today we want to just touch on the conditions. There's not a lot of information to share, but it is important to remember because it is a key part of the policy. So conditions section, you will find in the policy will outline several things, and I'll just highlight those few things at a high level. This is not a complete list, but it's basically again, the conditions, as you might remember from our discussion on aircraft policy conditions. They're the kind of the terms and conditions that both the insurer and the insured must do for the contract to remain in place. So here's just a few of them. Number one, an insurance bankruptcy does not absolve the insurer of their obligations under the policy. So even if the insured enters some form of bankruptcy, the insurer is still on the hook to provide the insurance coverage per the terms of the policy. The next, the cancellation and or non-cancellation terms are outlined in the conditions section. Typically, that means that they will provide at least 30 days notice of non-cancellation in general and or 10 days notice in the event of non-payment of premium, and that notice will be sent to the address that is listed on the declarations page of the policy, which is why we talked about the address being so important. We don't want some LLC in Delaware where the mail's not going to get there for 3 months because the policy will be long canceled if that's the case. So the date and the policy address is important as it turns to cancellation. Obviously, some states have different non-renewal obligations, and so the insurance companies will offer an endorsement to make sure they are compliant with every state rule. Changes. The conditions sections outline how changes can be made. That the named insured, in some cases the first named insured, can request changes, but changes are not officially a part of the policy until approved in writing from the insurance companies. So the policy is the policy plus any endorsements that the insurance company has approved and issued related to the policy. So if we add a pilot, add an aircraft, change of value or limit, that has to be endorsed and signed by the company. Those endorsements then become part of the policy. Again, like the aircraft, the duties in the event of an occurrence or loss are outlined in the conditions section. Typically, it will say you must provide timely notice. That means once you are informed, you very, very quickly need to notify the carrier of a loss or even a potential loss. Okay, some people think a claim has to occur. If there's been a loss you're probably going to be tied to, it's best to bring your insurance company on and their expert legal defense to address it. By agreeing to this insurance companies, you agree that the insurance company can come in and examine your records, examination of records, and there's a period of time usually stipulated. It may be even a couple of years afterwards, but they have the opportunity to verify the information that you provided was accurate and whatever information they need to do. But if there's an issue, they have that right to come and examine your accounting and other records. One of the other key provisions I wanted to highlight today, again, just a short episode, was that they have usually some form of condition dealing with other insurance. And it goes usually something like, if you have other insurance that applies to a loss insured under this policy, we will only pay our share of that loss. So if there's two companies that may potentially be on a loss, they're going to only pay that portion. Okay. It could be, that, okay, we have, some form of part that could technically be covered under the aircraft policy spare coverage, or it could be under on the property policy under part of their parts inventory. But in that case, you can't turn in two separate claims and collect double. That's called double dipping. And so these other insurance conditions prevent double dipping of an insurance policy. They're only going to pay the percentage of their loss. Insurance is meant to restore you to whole had the loss not happened, in general terms, not to make a profit. So double dipping is prevented. And remember, conditions are critical to the policy being enforced. One of the other things that we'll say is, proper representation. If there's any material misrepresentations, so information about the company or the operation that is either misrepresented, withheld, or not disclosed, that is actually a violation of the policy. So that's where you find an exclusion right within the policy. Premiums are laid out that the first named insured is responsible for that. It also says there's a separation of insureds clause or severability of interest, which says that when you have multiple insureds and additional insureds, that each insured under the policy will be entitled to a separate legal defense as if they were the only insured. However, the problem is that does not increase the limit of liability. So if there's $1 million combined single limit of liability, the limit is not grown every time you add an additional insured or another insured. It dilutes the limits, meaning we all sharing that limit. And ultimately, the insurance company's duty to defend a loss ends when the limit of liability has been exhausted. So that's important to keep in mind. So every insured under severability of interest or separation of insureds clause is treated as their own insured with a legal defense. However, it doesn't increase the limit, and that's very important to keep in mind. Again, rights of recovery issues are outlined. So if an insurance company pays a claim, the rights of recovery to the loss goes to or is subrogated to the insurance company, meaning, they then have the opportunity to go and collect on the loss they paid. Again, this prevents double dipping. The conditions actually outline what happens in the event of the death of the named insured, the assignment of the rights and duties. That's outlined there. And then there's also a key condition that regardless of what the policy says, the territory, whatever, especially the territory, the insurer can't break the law, including those of the OFAC, Office of Foreign Asset Control. They can't pay a claim in an OFAC sanctioned company or involving someone that's on the SDN, specially designated nationals list. Man, that's hard to spit out. Anyway, they cannot violate a statute or law in the process of the terms and conditions of this policy. So the conditions outlines that particular fact. But anyway, again, exclusions are found all throughout the policy, and if the conditions aren't met, that actually excludes coverage. So that's just an important thing to keep in mind. And in the next episode, we'll actually start digging into some more of the exclusions under the aviation CGL policy. So that's it for this episode. Until next time, as we continue navigating these waypoints of the aviation CGL policy and the aviation insurance world, we hope you enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aeris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit aerosinsurance.com. That is www.aerisinsurance.com. Disclaimer. These episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.